Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500, as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today.
So today's chart is Bitcoin, which on stock charts is $BTC USD. This is essentially the Bitcoin to US dollar relationship. And we're looking at a 2-year chart of Bitcoin here to illustrate this evolution of this asset, this new asset class, a relatively new asset class, and all the fluctuations that we've seen. People getting comfortable with looking at the charts of Bitcoin, immediately see an exaggerated y-axis. And the reason why I point this out is because if you look at a lot of charts, especially if you're used to looking at equity charts, you're used to the y-axis looking a certain way. You're used to a certain type of percentage moves day to day. You're used to a certain amount of volatility and a certain amount of fluctuation. Bitcoin essentially and other cryptocurrencies, to be honest, turn that completely on its head. So here you have a range from around 3,000 on the downside to almost 20,000 here today. And so, while this looks like a pretty orderly chart and a nice upswing, these are huge percentage moves when something goes from 13,000 of anything down to 4,000 of anything, and then round trips in a couple months. That's certainly these are huge percentage swings to get comfortable with. However, when you think about cryptocurrencies, I was asked early on when crypto started to proliferate and you started to be able to get good data on them. The question was, well, is technical analysis relevant? Because this is it's an untested thing. And my answer is, with something like an equity where you have fundamental data and you have price data, technical analysis is part of the overall picture because you're thinking about the big picture of the equity landscape and macro themes like the coronavirus and the Fed and supply and demand. You're also thinking about the fundamentals behind a company or behind a sector and what is potentially causing them to fluctuate. And then you're dealing with the price, the technical side of it, the price and everything related to the price. With cryptocurrencies, though, you're missing a couple of those. While you could argue that there's a relationship between macro themes and macro mindsets and cryptocurrencies, it's less of an established relationship, right? There's no 100% guarantee on what would happen. I think I think when the market sold off, the equity market sold off in March and Bitcoin sold off and other cryptos did as well, it was a bit of uncharted territory. There was no guarantee that Bitcoin would go down along with stocks. A lot of people actually speculated that Bitcoin and other cryptos would be more of a safe haven and people would rotate out of equities and into things like Bitcoin. That certainly didn't happen. So even whether it's a risk on or risk off asset, or whether you should even think of it as an asset instead of just thinking of it as a currency, is still an open question. And so in many ways, it's been its own thing. So I think the macro relationships are still to be determined. The fundamental data is obviously very limited. You have some data on mining and so forth, but overall, supply has a certain pace and there's a theoretical limited supply, and so there's no real fundamental data. It's not like cryptos are reporting earnings or something like that would change the character. So you're really left with a petri dish of investor behavior. This is technical analysis. It should be the sweet spot. The golden age of technical analysis should be analyzing cryptocurrencies because it is a pure read on investor psychology, on sentiment, on euphoria, on desperation. All of that should be reflected in the ratio of Bitcoin to US dollar. So the reason why this is my one chart is because Bitcoin is once again testing that ultimate resistance of 20,000. And I've been asked, what do you think about Bitcoin at this level? And I want to share with you some short-term thoughts and some long-term thoughts. So starting with the last 2 years here, really to show this rotation from the June high of 2019, the pullback into the late December low, it sort of moved back up just above 10,000. If you look at 10,000, that has often been a key level. Big round numbers tend to be support and resistance levels for any asset, but especially for Bitcoin, because when it's below 10,000, approaches it from below, I think that's when people have to determine whether or not they think it finally deserves to be above 10,000. You can see for much of 2019 and half of 2020, that was the unpenetrable resistance level, and it did break above there summer of 2019, but then quickly rotated back below. When it finally did eclipse 10,000 here in the summer of this year, it retested it from above and then resumed the uptrend. And so you have this breakout and retest pattern that's repeated a couple times during the course of 2020 here. So here, looking at the last 2 years, you can see the rotation from 14,000 or so, just below there, here in mid-2019, the low around 4,000, the retracement back up to that 100% retracement, and then the breakout in October to November, and then the further acceleration to the upside as Bitcoin has quickly gone from around 14,000 to almost 20,000 in just a month or two. So the question is, what's next? Well, first off, I want to point off this very interesting symmetrical relationship. If you look at the last 2 years, support and resistance levels have been fairly consistent. So 10,000 has been sort of a magnet price, right? Tested it a number of times from below, even again here in April, May, June, and then a breakout, a retest from above, and then sort of moved on. Then that next level of around 12,300 or so lined up very well with the secondary peak in July to August of 2019. That was where we found resistance again. And then that left the ultimate resistance level around 14,000, which it paused just briefly, but then really quick. I mean, it spent about 2 weeks sort of hovering around that level, but then, finally broke through to the upside. From there, you had the most recent retracement over the last week or two, which is over the Thanksgiving holiday. You had that big move to the upside, a pullback down to just above 16,000, and now the acceleration back to the upside. And the question is, what's next? So, I think the symmetry is really interesting. The reason why I spent all that time on that symmetry is because if you take this last year and a half and you treat it as a big base, and a base is when you have a rally and then you have a consolidation period. If you think of this big, 2019, 2020 as a huge range with 14,000 on the upside, with 4,000 on the downside, and you take that move from low to high and you project that same distance to the upside, there are a couple different ways that you can measure that. One thing is you just take the height of it. So if you take 4,000 on the bottom, you take about 14,000 on the top, and that's about 10,000 points there. If you would project that to the upside, that would be the minimum upside objective of around 24,000, right? Which would be basically just a symmetrical move, making an arithmetic measurement of low to high and projecting that breakout as going other. The other thing you can do is do a log scale, which is you take this actual distance, this percentage move from 4,000 up to 14,000, you project that entire move up higher. That actually measures up to more in the 37, 38,000 range. So you have a pretty wide range of upside objectives. I think the first one is a reasonable upside objective given the strength that we've seen in Bitcoin thus far, which essentially means if we can get above 20,000, which I think just like 10,000 is a key psychological level, I would think 20,000 is also a key psychological level. And we'll look at a longer term chart here in a minute. But overall, I think that's pretty key. If and when we can eclipse 20,000 and follow through that to the upside, I think you measured at 24,000 as the next minimum objective. I would not be surprised if eventually we get up to that 37, 38,000 level, which would be a full extension using the log scale of this base. The reason why we do that, it's a traditional technical methodology, looking at the height of a base and projecting that from a breakout level. So really here in mid, sort of October to November, when we finally broke above 14,000, broke above that, the left edge of the base, that really is when you can open the minimum upside objective based on the height of the pattern. Predecessors of mine from previous years would say the broader the base, the higher in space. So the longer that the time is spent in this range and the higher this base, then once the breakout occurs, the further upside that you have. So the broader the base, the higher in space. And so, essentially that breakout in October to November really clears the way to much higher highs for Bitcoin. So the long-term picture, I would argue, is fairly constructive. But what about the short-term picture? So if you look at what's happened on the daily chart, the Bitcoin ratio turned turned overbought here in October and has remained in that overbought region for a pretty extended period of time. And if you look back at the history of Bitcoin, that's actually unusual that it would remain that overbought for that extended period of time. It certainly can happen. And what's more common is what you see here in mid-2019, sort of spring into summer, where you saw it become overbought and come out, overbought, come out. And you can see that those movements when it comes out of the overbought region are sort of these short-term pullbacks within this longer-term uptrend. Having said that, you can see previous overbought conditions here earlier in the spring was sort of the end of that first leg higher. You can see the overbought conditions in July when it came out of that region there in July to August. That was the end of that leg higher before a pullback. Now we've been overbought for a while. We've come out of that overbought region. Most recently, we've made a new, pushing to a new closing high, but on lower momentums. This is a bearish divergence with higher highs in price and lower peaks in the RSI, which in general is a bearish divergence, which speaks to short-term weakness. And essentially what this tells you is in the short term, it's gone so high so quickly, you'd expect an alleviation or expect it to alleviate some of that strength. Some would argue that the move down to, 16, almost 16,000 was enough. But I think this bearish divergence tells you there's more backing and filling that might need to happen. But after that occurs, again, I think after any sort of pullback, a confirmed valid breakout above 20,000 certainly clears the way to 24,000 as a minimum upside objective, and then much further long-term objectives up in the upper 30,000s, the 37 to 38,000 range. I think are reasonable given the height of this breakout and the distance with that the breadth of that base. When you look back at the weekly chart, you can see why this 20,000 level is so significant. This is the end of 2017. That was when people speculated Bitcoin was going to go up and not ever stop going up. That was where we topped out around 20,000. We then came back, and this is the full retracement over the last couple of years, getting back up to that 20,000 level. So what you can also do is actually take this range from here to there, and that's when you measure up into the 30,000s, taking that height of that entire pattern certainly can suggest a break above 20,000 completes that base from low here in late 2018, the high in late 2017. That's the projection to get up to the upper 30,000s. So overall, again, this base is pretty significant. First things first, though, the trigger. Anytime you have a pattern like this, a base, it's all about the frame of reference, which is this sort of this rectangle here. A break above 20,000 completes the rotation, completes the confirmation of a base. A valid breakout above 20,000 is what opens the door to much further upside. That is the one chart for today, which is looking at Bitcoin to US dollar. On stock charts, it's $BTC USD. If you have any questions, check out some of the other videos on my YouTube channel where we break down the relationship between price and sentiment, investor psychology, and decision making. From everyone here at Market Misbehavior, be well, stay safe. Talk to you soon.